obviously one of the things that you can start to understand is that if I do that trade, if I bought the dollar yen and I was still short the pound yen, I effectively would have had a spread trade, short pound dollars. Yes? Now, what price would my short pound dollar be at? If I took that trade, what is my short pound dollar price? Approximately 40.55, right? Yes? Everybody on board? So if my short pound dollar price is 40.55, that means that I got a short trade. I would have a short trade valuation of around about that price. It never appeared on the screen, did it? That short pound dollar trade never appeared on the screen, but that's now my net position. I am now short the pound dollar at that price. It doesn't matter what else happens on the pound yen or the dollar yen. That's my net position on pound dollars, isn't it? So if that's my net position on pound dollars, I just manage the pound dollar now. So obviously if I wanted to buy the pound dollar at 140.30, I would have completed the triangle and I wouldn't have any exposure anywhere. Yes? You might say, but you haven't closed out your short pound yen trade or your long dollar yen trade, and now you've got a long pound dollar trade at 140.30. So if I go in and buy dollars, if I now go, in and buy the same amount of pounds, and obviously you've got to buy the same amount, if I now go in and buy GBP USD, and I buy it at 140.30, I have got no exposure to the markets, guys. None whatsoever. I can't make money. I can't lose money. I'm effectively completely flat. The market, completely flat the market, right? You may say, why are you completely flat? Well, let's think about what I've done on the pound. Assuming all the numbers are right, I've bought pounds here, yes, and I've sold pounds here, so I don't have any pound exposure. What about my Japanese yen exposure? Well, I've obviously sold Japanese yen here, and I've obviously bought Japanese yen here. What about my dollar exposure? Well, obviously, I've bought dollars here, and I've sold dollars here, so what's my exposure? Zero. I don't have any exposure to anything. Basically, if I buy the pound yen at 140.30, I am flat with a profit of 25 pips. Flat with a profit of 25 pips. So obviously that's something you could, if you were obviously in the long dollar yen, then obviously I could then go ahead and do the pound dollar, or obviously the better option, because now I can't make any more money or lose any more money. The obvious answer is, unless I have an idea that one of these three markets is going to break, in which case I want to put stops at break even in two and leave the other one as an outright. It just gives me options, doesn't it? I mean, I could just simply close off the short pound yen trade. I could close off the long dollar yen trade instead of buying the pound dollar. But at the end of the day, all I am at the moment now is completely 100% flat if I buy the pound dollar. Now, if I don't buy the pound dollar, what actually am I ended up doing if I now buy pounds? Sorry, if I don't buy the dollar yen position, what am I actually in? So let's think about what I'm actually in. I'm short the GBP, JPY at 153.90s. Yes? 153.90 short the pound yen. If I now go and just simply buy the pound dollar at 140.30, what is actually my position? Well, now I don't have any pound positions because I've shorted the pound and I've bought some sterling against that. And now I'm obviously long the Japanese yen and I'm now short dollars. So I'm short dollar yen, isn't it correct? I'm short dollar yen. If that's the position I want to be in, then that's what I would be doing if I bought pound dollars at the moment against a short pound yen position. If I bought pound dollars right now, I would initiate a short dollar yen trade. Well, I don't want a short dollar yen trade because yields are going up. Well, they're not going up, but they're not going down anymore. So I don't want to do that trade right now. That would be stupid, right? If I believe yields are going up, what should I do? What simply should I do in that situation? If yields are starting to go higher? Well, I should close out the pound yen position altogether, correct? Because if yields are going to go higher, that's the trade that's going to start losing me money. It's already made me a very, very nice profit, so I'm going to start closing that trade out almost immediately at 68s, 153.68, and I'm going to bank that money, right? So we're going to pick up 22 pips profit in that trade. Now, obviously, if I think the dollar yen is going to go up, obviously, if I had bought the dollar yen, I'd be leaving that position in place. And the one thing I would maybe start thinking about is whether I wanted to buy the pound against the dollar because of the fact that there was still some value to buy the pound against the dollar, or no value at all. I don't know. We'd have to wait and see. But certainly this is not a trade I fancy at the moment. So this isn't going to be in my book for sure. That's not going to be in my book for sure. But this just shows you that there's ways and means around whatever position you're trying to accomplish or are trying to achieve. You've just got to remember that if you do certain things, you could end up with absolutely no position whatsoever, and you wonder why you haven't made any money or why you haven't lost any money because you don't have any position. It's like those numbnuts that say, "Oh, we'll open two positions. I'll open a buy trade on the pound dollar, and on a separate account, I'll open a sell trade on the pound dollar." And you're like, "Why? What's wrong with you? Are you losing your mind? You're an absolute nut. Absolute nut job." Sorry, can you say that people are nut jobs these days? Or is it just loonies? I suppose it's loonies. It's more politically correct, isn't it?